When I'm feeling down, I can't win. Pour a strong cup of coffee and I tune in. I'm waking on up to Java with Jim. Now I know my best day can begin. Yeah.
Good morning, ladies and gentlemen. Welcome to another exciting episode of Java with the Jims. My name is Jim Meyer, broker associate of Remax Gold. Now you have a friend in the real estate business. I've got my good friend Carlos de la Fuente here. He is going to loan you some money, right? There you go. Carlos, what are you drinking?
I am drinking some coffee with my favorite creamer, which is hazelnut.
Oh, okay. Very good. Hazelnut, that was one of my ex-wives. Okay, so you know what? I like my coffee the way I like the stock market, totally controlled by unseen forces. Thank you very much. And that's why you probably are you a big fan of the stock market?
Of course,
Are you a big fan of real estate?
that's my business for 26 years.
Which one do you like better?
Real estate, because it's more consistent. I think we've seen the market go down, and all the time I've been doing this industry twice.
Yeah. And you know,
much less than the stock market going down.
Right, exactly. So if you're never going to wake up in the morning saying that my real estate is worth zero. And all of a sudden the government took over that corporation that I thought I had a bunch of stock in. And now the government is running it and the stock value is down to zero. We're not going to, mention any names, General Motors, Barack Obama. So anyway, but the point is that let's just say I want to start getting going and I have no money. I'm equity rich, cash poor. I found a little fixer. Can you walk us through the scenario if I've got a lot of equity in my primary residence and I want to go buy, fix, and flip a house? You'd start with a HELOC, am I right?
Right. Most people that have equity in their home, it's not free and clear yet. They still have a first loan. Now, let me say this because this is very important. We can not assume that people have a great rate on their first. Not everybody did a loan in that COVID period of time. There are quite a few people that they bought homes with large down payments and have equity in it, and they did it in the last few years, and they're in the 6s or 7s. So there is a possibility you can redo the first. But if you do have a good rate on the first, then yes, traditionally, you want to take out a HELOC, you want to take out a second, pull some money out of your owner-occupied property, put it into a fix and flip. Hopefully you recapture that money with a nice profit, pay off the loan if you choose, move on to the next one. Cycle, repeat, rinse and repeat, rinse and repeat.
All right, so you just made me think, is that so one option would be a HELOC and the other would be a cash out refi, correct?
Correct.
And so for that, is there a rule of thumb of what interest rate that you have now where you don't want to touch it versus like say if you're at 5%, you might say keep that first, get a HELOC. But if you're at 6%, you could probably do better.
If you're at 6.25% and less, I would keep what you have.
Okay.
And get a second. If you're in the 7s, then depending on what program you do, FHA, conventional, you might be able to drop your rate 1% and pull some money out of it.
Okay.
Some people got their loans on non-QM, like these bank statement loans because they're self-employed. They may be in the 8s on their first.
Oh, wow.
So yeah, it cannot be stated enough. Every circumstance, every scenario is different for so many different variables and reasons.
And the nice thing is you don't mind listening to their needs and figuring out what's best for them.
Oh, not at all. I still enjoy it all these years later, hearing different scenarios and different circumstances and coming to solutions together. Not just me pushing a product down their throat, giving them options and letting them decide which one's the best one for them.
Beautiful. Okay, well, you know what? I think we're going to have to come back tomorrow and have one more show. Am I right?
Okay. Yeah, that'll work.
You
I'll
guys,
see you tomorrow.
there you go.